Why are the institutions FOMOing in, racing into a new asset? Well, because they see what we all should see. They see that there is no end to the monetary debasement that's coming. And they're all looking for a way to protect themselves. Phase 2 is what we call the frenzy phase. And this is where we're at today, all right? This is gonna be unlike anything we've ever seen, and no matter how bullish you are, you're not bullish enough. Sure, today Bitcoin is about a $2 trillion US dollar market cap. Hundreds of billions of dollars have gone into it, and now we're about to see trillions of dollars come into it. Using the numbers that we have from the last 4 to 5 years, we can project out the money supply growth at 8% continuing, bonds going up 5%, real estate and equities, which are basically perfect proxies for monetary debasement, going up at 8%. Bitcoin maybe finishing the decade at about a 53%. We're at about 60% right now. That would put Bitcoin at a 21 trillion market cap. $1 million per Bitcoin in the next 5 years, or a 10x from right here. Now, this may sound like a big number, but if we look at it, Bitcoin is only capturing 1.5% of total store value assets at this point. Now, if it was able to get 5%, which might be way more reasonable, that puts Bitcoin at a $3 million price per Bitcoin. So I believe 1 million is extremely bearish and not bullish at all.
Bitcoin has matured from a speculative asset to a collectible with recognized value, positioning itself as a store of value comparable to gold. Moss underscores that this stage is part of a natural progression. While not all collectibles reach this level, Bitcoin's unique properties, including its decentralization, security, and scarcity, ensure its ascension. This evolution aligns with monetary history, where assets transition through stages of acceptance. According to Moss, Bitcoin's current phase reflects its institutional frenzy. The influx of institutional investors and sovereign entities adopting Bitcoin demonstrates its increasing legitimacy and long-term potential.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Now this is where Bitcoin evolves from the collectible phase and cements itself as the premier store of value. All right. So what we can see is we're in this institutional frenzy phase, and we're starting to see institutional adoption come in. And now, of course, here we are talking about sovereign adoption that both happen in this phase. Now, this maps, again, in the evolution of money, and will complete the store value phase. We'll get to the medium exchange phase next. But this is where we're at today. Now, again, not all collectibles make it to this next level, but Bitcoin will. Now, I do want to point out real quick for everybody who thinks that they're too late, that maybe they missed it. Using an S-curve dynamic is how we'll look at technology adoption. Now, one way we can look at this S-curve is that the time it takes to go from 0 to 10% is the time it takes to go from 10 to 90%. And the reason why I want to show you this is because it illustrates that the size of this move we're going into now is much larger. Sure, today Bitcoin is about a $2 trillion US dollar market cap. Hundreds of billions of dollars have gone into it, and now we're about to see trillions of dollars come into it. The size and speed of the move is much bigger, so you haven't missed anything. It's just getting started. Now, at this point, we can see this total store value assets. You can see Bitcoin down here on the bottom right, sitting today at about 2 trillion, and it's still just a little blip on the road right here, a drop in the bucket. Now, how much bigger is it going to get? Well, I got a bunch more charts to show you, so don't worry. But really, right now, this is the frenzy. This is the institutional phase. We can see that right now today, about 60 companies have already started adopting Bitcoin on their balance sheet, and this is happening every day. We see new announcements of this happening. This chart, the big chart here, shows the real institutional adoption. We have MicroStrategy adding about $1 billion a week. I just saw before I went on stage, Riot just added about $500 million of debt to buy Bitcoin. We have Marathon doing $1 billion. And right now, this is showing us that about 13.5% of all Bitcoin is now being held by institutions. Of course it is. Bitcoin was always coming for everybody, and this is part of the second stage. Now, it's not just institutions, it's also sovereign adoption. We have sovereign FOMO. We have, of course, El Salvador, sort of with this first mover advantage. Brazil, just introducing bills to build a strategic reserve. Of course, the United States has their Bitcoin bill going through. Now, per Polymarket, I looked earlier today, it's about a 25% chance of going through. I think that's way too low. I think it's going to be much higher. Now, history shows us what happens when sovereigns start competing. History shows us a lot of things. So, for example, in the 1800s, the entire world decided to go to a gold standard. Some parts of the world, like China, didn't want the gold standard. They had silver. They wanted to stay with silver, and they lost their position as a world leader. We saw the 1950s, the race for space. We saw the race for nuclear weapons. When nations start competing, things really take off. So we have a precedent for where this is going. But why? Why are the institutions FOMOing in, racing into a new asset? Well, because they see what we all should see. They see that there is no end to the monetary debasement that's coming. And they're all looking for a way to protect themselves. What we have right here is that we can see the bottom right is the U.S. Federal Reserve's balance sheet, which has been expanding by 13% a year over the last 4 years. We can see the money supply has been averaging over 8.5% over the last 4 years, and there's no end in sight. How do we know there's no end in sight? Well, besides the fact that they're in a debt-based monetary system that always has to grow, the government actually tells us that. We can look at the CBO, Congressional Budget Office, and we can see that they are projecting through 2054, the next 30 years for us. And they show us that the deficit spending is going to get bigger and bigger and bigger. They show us that the debt levels are going to go up like a hockey stick. And they also show us that population growth on the top right is going to plummet as the GDP goes down at the same time. Population growth going down, GDP going down, means debt levels go up. Now, they also show us the budget through 2054, 30 years from now, and there's no recession in sight. They don't expect any dip in the revenue coming in. So, where does all this come from? Money printing. Now, of course, this is what they tell us for the next 30 years. When you look at the population decline and the GDP decline, I think this is way understated. But for the purpose of what we're doing, we're going to use these numbers and project it out into the future. So in this phase from 2020 to 2030, using the numbers that we have from the last 4 to 5 years, we can project out the money supply growth at 8%, continuing, bonds going up 5%, real estate and equities, which are basically perfect proxies for monetary debasement, going up at 8%. Bitcoin maybe averaging, finishing the decade at about a 53%. We're at about 60% right now. That would put Bitcoin at a 21 trillion market cap. $1 million per Bitcoin in the next 5 years, or a 10x from right here. Now, this may sound like a big number, but if we look at it, Bitcoin is only capturing 1.5% of total store of value assets at the point. Now, if it was able to get 5%, which might be way more reasonable, that puts Bitcoin at a $3 million price per Bitcoin. So I believe 1 million is extremely bearish and not bullish at all.
Critics often argue that Bitcoin has failed as a medium of exchange. Moss counters this by explaining the evolutionary process of money, citing Gresham's law, which states that bad money drives out good. People naturally hoard superior money, like Bitcoin, while spending inferior money, like fiat. Historical examples, such as the disappearance of pre-1965 silver coins from circulation in the U.S., reinforce this point. Moss asserts that Bitcoin will only be used as a medium of exchange when it offers capabilities fiat cannot. This shift will occur in the next phase of Bitcoin's evolution, post-2030.
Now let's just keep going. If we look at it as a percentage of store of value assets, just so you can visually see it a little bit better, you can see that now Bitcoin is about on par with gold. Maybe it's overtaken. It's flipped gold by this time. Now, it's one point that I want to bring out right here real quickly, is a lot of people think that for Bitcoin to be worth 1 million or 5 million or 20 million, well, the dollar's worthless, right? At that point, the dollar doesn't buy anything. No, that's absolutely not right. You see, Bitcoin is disrupting other assets. I have a venture fund called the Bitcoin Opportunity Fund. As a venture investor, we look at a disruptive technology, we look at the size of the markets it's disrupting, and then we speculate as to what percentage we think we could take from those other markets. So Bitcoin is taking from bonds, it's taking from real estate, it's taking from equities. The dollar doesn't have to die. Sure, gas goes from $4 to $8. It doesn't mean it goes to zero. Now, is that realistic to get 1%? Well, we can look at other disruptive technologies like Uber or Airbnb. Both of them were able to capture 10% of their market in less than 10 years. 1.5% is extremely conservative. All right, now let's start going into the future, and I'm running out of time, so I'm going to start talking even faster. All right, now we're getting into what's called the deployment phase. This is 2030 to 2040. Now, this is where things start getting really exciting, but warning, I have to leave some historical numbers behind, and I got to start using my crystal ball. My crystal ball is a little fuzzy, so forgive me. We may have to kind of fudge through this a little bit. All right, this is the adoption and the synergy phase. Now, this is where things start getting really exciting. We start to see adoption. Now, some interesting things about adoption is a lot of Bitcoin critics want to tell you that Bitcoin's already failed. It hasn't achieved any adoption. Why isn't it a medium of exchange, they tell you? Why can't I just go to the store anywhere and spend my Bitcoin, they ask? Well, I'll tell you why. Because history gives us a framework and tells us that it doesn't come until the next phase. And anyone who's expecting that right now doesn't understand technological revolutions. They don't understand monetary history. They don't understand that there's this evolutionary and emergent process that we have to go through. And what they also fail to understand is that even though Satoshi called it an electronic cash system, they say it's failed because it's only a store of value, they failed to understand monetary history and something specifically called Gresham's Law. Anybody ever heard of Gresham's Law? If you read Bitcoin Standard, you probably do. Gresham's Law says that bad money drives out good. Bad money drives out good. So what that means is we're always going to want to use the bad money, not the good money. As long as I can use fiat currency to buy my lunch, or buy my drink at the bar, I'm going to use the fiat currency and I'm going to save the good money, which is the Bitcoin. Why would I spend the good money? Now, we have a perfect way to understand this. In the United States, of course, we have coins and we have quarters and dimes. A quarter's a quarter of a dollar. Now, up till 1965, these were made out of pure silver. Starting in 1965, they made them with junk metal. That's nickel and copper. You cannot find in America a pre-65 quarter or dime in circulation. They're all gone. They were driven out. If you just so happened to get some change and you found a pre-65 quarter and dime, you would not spend it. Why? Because a quarter now is worth $4, but you'd only get 25 cents for it. The bad money, the worthless quarters and dimes, have driven out the good ones. You wouldn't spend those. And so it's a perfect illustration. Now, why would we then use Bitcoin as a medium of exchange? Well, we would only use Bitcoin as a medium of exchange if it could do something that the existing money, the fiat system, could not be used for. Now we can use this as another example.
Moss envisions the deployment phase of Bitcoin between 2030 and 2040. This period will see widespread adoption and integration into global financial systems. While acknowledging the speculative nature of these predictions, he remains confident in Bitcoin's trajectory. The deployment phase will address critics who question Bitcoin's utility. By this stage, Bitcoin will disrupt traditional financial systems and redefine global commerce. Its role will expand beyond a store of value to encompass a broader spectrum of monetary functions, driven by technological advancements and growing adoption.